Is up and running, and we are coming up to 8 o'clock, and welcome everybody. Welcome to Wednesday the 30th of August, a big day in terms of economic releases, and welcome to our 1 hour that we share together on Wednesdays and Fridays. Quick recap on disclaimers. All Bookmap Ltd materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. And trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future benefits. There's the usual thing of me, but we'll just ignore that one, get rid of it, go back on the display capture. Yeah, just before we go through the agenda for today, I'm just going to just reiterate that comments are very welcome. Ideas for what anybody would like to be discussed are welcome as well. They can be posted in the Discord channel under my name in Bookmap, and also during the webinar live on the YouTube channel. So welcome everybody again. Okay, before I go through the agenda, we can have a very quick zoomed out look at the heat map, and you can see a thick band of liquidity up at 4508, 4509, and we also have some good liquidity below. So it's a mixed bag, and if we zoom in a little bit more, you can see the actual numbers on that liquidity. Okay, let us have a look at the agenda. Okay, we're doing a context update, quick checklist. This is a recap of what I talked about a couple of weeks ago in terms of our personal checklist before we ever trade on any particular session or subsession. And then we're going to have a look at something new this week, which is Python for Excel, and I'll quickly talk about why I'm mentioning it. And in our recap today, when we go through the London Open, the first hour, I'm going to try and do both NQ and ES as quickly as I can. We're going to try and use the Bookmap settings and change those settings up in terms of researching and reviewing what really helped and what would not have really helped during that session today. And then some live trade analysis. Obviously, since we have a very big economic release being the GDP in 27 minutes, we will pause and we will watch that for a good 10 minutes at least. Let me just bring up the economic releases for today. Yeah, very quickly. I've got this photo up at the moment. I'm seeing if it comes up in YouTube. I think it will come up in a second. This is a photo of just something that gives me reason to be grateful. It's one of those parts of the body-mind check. This is Trig in Perth in Western Australia, and I'm grateful that I was able to run about 6 kilometers along the headland to that beach yesterday. So that's something that I'm grateful for. Just to reiterate that I do practice what I preach. Okay, let us have a quick look at the calendar for today, or in particular this session. We've got 2 news releases. We've got the which are marked in red. We've got the ADP non-farm employment change at 8:15 a.m. Eastern, and the GDP preliminary numbers quarter upon quarter at 8:30 Eastern. So there could be some volatility. In fact, there's very likely to be some volatility, more likely to be at the 8:30 than the 8:15 release. But you never know, and you can never predict when that volatility will occur with certainty. Okay, right, let's go back to the agenda. Okay, and yeah, we've got our trading view charts there as always, so you can see the reversal that happened before 6 a.m. Eastern in NQ and ES, and looks like on this occasion yet again the NQ led ES if you look at those two charts. Okay, so this is just a recap of what I spent a whole hour talking about a couple of weeks ago, the checklist for trading. I'll get to the context in a second. Personal check-in, whatever you do for your body, if you're into cardio exercise, if you're into weights, whatever it is, or if you're just into walking, make sure that your body is refreshed with your mind checklist, whether that's mindfulness, breathing exercises, whatever it is that floats your boat, do that. And something that Merritt Black said that I thought I would add in to this little list today, which I didn't mention or didn't explicitly mention when I did this list previously. My process is a better trader than me, and I can vouch for that one. That it is very, very true. Whenever I have substantially deviated from my process, I have always regretted it. You may get an extra win in the short term, but in the long term, being the whole session, it is usually a disaster to deviate heavily from your process. Trading plan refresh if needed. So what is it that you're trading? Just having it to hand, whether it's a physical printed copy or a digital copy, is always a good idea. And onto the context, which is both up there and down here. Let's go and have a look because the context has changed. I'm not going to talk heavily about the macro themes. What I will say is that some of the options related information that you get in RTH was certainly useful in the last couple of days, or certainly that turnaround yesterday in RTH. So it's one of those things that if the macro theme is not crystal clear out there, there are other instruments out there that can give you some information. One of those are the options, the other are the underlying stocks. I mean, I've always got charts of things like TQQQ, Apple, Nvidia, etc. Tesla used to be the flavor of the month not too long ago, and it still is to some extent, and Facebook Meta was as well. Just things that you're aware of, or other things that can show a bit more clarity on likely direction for a session if the overall charts are not that clear. And by the overall charts, I mean the dailies, and we're going to go to that now. So let's switch over. By the way, those of you in Discord, I've only got you and Stan and Balian. I'm hoping you can see. So when I switch over right now to the image slideshow, that you can actually see the charts. So if anybody could just put yes or no in Discord, that would be good. Okay, right. The ES daily chart. The overall context has changed. In the previous video, in fact, just last Friday's video, we had a strong uptrend being broken. If I draw it if I roughly draw it with my mouse in that direction, and we had an uptrend that was broken and then retested. We've now completely removed that because I try and make the trend lines as objective as possible. And now the only thing that really is being respected is a longer term uptrend. I've got two uptrend lines, a more recent one and one from further ago, a few more months ago. And from a daily perspective, we are back in an uptrend. You can see that huge bar in ES. Now if we switch over to NQ, come on. My mouse is flickering a bit, so I'm struggling a little bit with it. You can see an enormous bar in NQ that wiped out the entire huge bar that we talked about on Friday, which was the buyers being shut off, that red bar there. Well, we've taken that one out now, so the whole picture has changed in terms of overall context. So that's just something to bear in mind. If we go back to the TPO chart that we like looking at, or I like looking at, I've got the bookmap meters there that's slightly in the way, and I can crush the zoom on this one so you can see the picture here. So you've got that huge day yesterday with a lot of value towards the high, Let me draw on it because I haven't drawn yet. Let's draw. Let's talk about something that we've talked about on these profiles going into ETH before. Okay. That is a classic poor high. And the probability, and it's a very strong probability, is that in ETH, which is essentially a continuation on this occasion of that session, i.e. this session here, the probability is that we will take out this poor high and continue an exploration upwards. Sometimes you just keep going and going. On this occasion, we did not, and we did actually reverse back towards the bottom of this value here. So if the value is the one that I've drawn, we did actually retrace a large portion of it, and we took out settlement, which is just there. So if I get rid of all of that, and you have a look at the profiles in context of everything else on the chart, and let me see if I can actually make them relative to each other for a second. Yep, okay, right. They're now, all the volumes are relative to each other, and you can see that whilst the volume at the volume point of control is not huge, you can see the context that was a significant day in terms of its range, if nothing else. And if we had this here, which was a huge volume point of control, a naked volume point of control over here from Monday I can't actually read, I think it says the 14th. I'm not actually sure, it could say the 24th. That was the big flag that it took out yesterday. So that was a nice target for them to know that there was liquidity there, or enough transactions occurring there that likely liquidity was occurring, and that was something that got taken out in RTH. Okay, that's just some RTH profile stuff. I don't talk about that very often, but it is stuff that I look at, and that's why I have one of these charts. Okay, let's go back to where we are. Okay, so we have looked at the context so that any start of a downtrend has been squashed, at least temporarily. I'm just going to stop as well and just see. Great, thanks Balian, for the comment that you can see the slides now in Discord. That makes me happy. Okay, so we've done our context. We've looked at the economic releases. I'm speeding along because I know that the first release is in 3 minutes. And the last point, which I always state, is keep an open mind. Okay. Right. Something new this week. I'm going to cover that one off because we've got 2 minutes. Hold on. Yep, we've got 2 minutes. So I may stop and come back to this, but let us just go to the slideshow and have a look at something. Okay, this is a screenshot of my installation of Microsoft Excel. And what I am pointing at is a brand new feature that came into Excel that could be especially relevant for traders that either have some Excel experience, expertise, something like that, or are willing to dig into Excel and Python. Python is a very, very commonly used programming language. It's probably one of the easiest languages to learn. Why could this be important for traders? Okay, let's just go to another slide to explain this one. Okay, this is a slide by my colleague Jay Trader, who does a regular Bookmap webinar on stocks every other day. And this is just something he posted, I think it was yesterday. So 10:30 a.m. Eastern, 10:38 p.m. my time. Where am I going on this? Having the full features and extensibility of the entire Python language, and it is the full language because it is basically Python in the cloud powered by Microsoft and Anaconda with an awful lot of the packages, you name it, Seaborn, Matplotlib, Plotly, just about every data science language you can imagine that is within data science module within Python. It essentially means that if you have your trading results, whether you've taken them in Bookmap, whether you've taken them in Sierra like me, or whether you've taken them in Ninja, and you can export them in some, wow, let me just stop and we can and get back to the charts because we have had some volatility on the release of the ADP. So I'll have to stop there for a second. I'll come back to that in a second. While I have a look at the market, we can have a look at them both. Whoa, NQ has really taken off. I'll answer a question from MLU JCKS. That volume profile software is just Sierra chart, and that was a combined time profile and volume profile. So it's just using the inbuilt features of that program, and it's just a template that I developed for my personal use. But there are no custom indicators or anything like that. That is all core functionality of that software. Let's go to ES. Okay. So we're just watching to see if there's anything that we initially observe after the ADP release. So we can see some liquidity being removed up at 4515, that the liquidity up at 4528, 4538 is stable, and they've been playing some games around the liquidity towards 4480. But essentially there's a decent zone of liquidity down there that may or may not get tagged at some stage, but it does not look like that will happen before the 8:30 release. So we had a good push up by NQ, and it seemed to drag ES with it. Looking across at financial juice, I can see that the actual employment change was 177,000 against a forecast of 195,000. So my reading of that was it's a slight miss, but the market seems to have liked it. It doesn't really matter whether I think whether I've misinterpreted that as a miss or a hit. All that matters is what does Mr. Market think of that news, and the instantaneous reaction is positive, and we're now going towards this liquidity up at 4515. Let's just have a look now. Since they seem to be going towards there, when did it come in? I've got the entire Asian session, so I'm just seeing that looks like it is stable resting liquidity in ES, and it's not huge. It's not huge by any means. It's only in the 120, now 170 region, but it's been there since, we can see exactly when it came in, at about the first London reversal point, just the half hour after the London Open, 3:37 a.m. Eastern. So that's interesting that they flagged it there, and it does appear that we are going to get close, or maybe even tag that at some stage, perhaps even before the RTH Open. I'm looking at an NQ chart at the same time, and we can see that it's if the scene of the crime, let's get this down to a 1 minute chart, especially for the next release. Let's move it down to 1 minute. Yeah, we are way off that last swing low in NQ, so relatively bullish, but we have reached a high liquidity zone, so ES may struggle a little bit to get to that 4515 initially, but it may get there on the next news release. Okay, so that's just watching NQ drag ES up. I'm looking across at the other stocks that I've got. Microsoft is at its highs, so is Apple, and so is Nvidia. Okay, so everything is quite bullish in pre-market at the moment, so they're all pushing ES up. So there's nothing too scary at the moment, but that doesn't mean that they don't have a good push down to grab some liquidity and then keep going up. Okay, where were we? We were talking about Python for Excel. Okay, one of the reasons why, or some of the reasons why you might be interested in it is um, there is a huge benefit, I think benefit's the right word, in reviewing your performance. Um, unfortunately, in my personal opinion, I've got to stress that a lot of this is my personal opinion. Um, I find a lot of the trading statistics software. I'm not commenting on the Bookmap trading statistics here. I'm talking about the commercially third-party available softwares. The ones that I personally have tried out are things like TraderView, Trader Journal Spreadsheet, EdgeWonk, those kinds of software. They're quite expensive. They've got a learning curve. They're not customized to your own trading operations in the way that you would necessarily like. And I often find them to have too many features in them that are not specific or do not have a tremendous amount of relevance to the way that I conduct my trading operations. So what I was saying previously was that if your trading software does let you export your trades, and we're talking about whatever stats that does export, Bookmap does export quite a few stats, and so does Sierra. I think Ninja does from memory. Um, Provided you can get that data into Excel, you can build yourself something that is just as good, if not better, because it's specific to you in Excel without too much effort. What does JTrader say on this slide? Track each day the setups you're trading. Yeah, it's very, very simple in Excel. You can just have a column with a drop down and just one of, say you've got 2, 3, 4, 8 setups, whatever it is you have. Very easy to use a drop down to say for this trade it was that, and then use that to check your performance. We are talking about ETH primarily in this. I'm just going to get off this slide and get back to the display capture, but I'll keep talking about Excel for a second, just so that you can see what's happening in the market. They've just had an iceberg pushing it up, but they've just taken it off and they only filled 30, so that's not that. Just a little push that they gave the market upwards, but it wasn't a huge push. You can basically track, say, you want to know what your performance is like on Tuesday London Open, because that's when you're always available and that's when you want to know whether or not you have good performance. So you might want to know, how am I in the first 30 minutes? How am I in the first 90 minutes of the London Open? It is now incredibly simple, or relatively simple, to use Python for Excel to do that and have some very, very nice charts to go with it. So that was just my 2 cents thoughts on something slightly left field, but that is related to trading and that came out in the last week or so. Okay, let's get back to our agenda. Okay, so we've talked about that. Okay, we're talking about the London Open today. We've got 7 minutes before the main news. So the idea at this stage is that we've seen nothing too scary. The liquidity, the closest liquidity is really up above, and they seem to want to be drifting up to that liquidity and the 4515 level eventually that they flagged a good few hours ago. Okay, all right. And just looking across before this one, something that I always look at as well is how the dollar is tracking today. And it has been tracking downwards since, effectively since just after the London Open. So it did take out yesterday's low, but it's bounced a little bit off that. So in other words, the dollar is fairly weak, which and that, since it has a relatively inverse correlation with NQ and ES, certainly for the last few months, that is positive news for the very, very, very short-term trading in ES and NQ. Let's have a look at NQ, because I think NQ is driving this session so far. So let's just see what it actually did on that release. So at 8:15 we had the release. We had a big drive right up to this liquidity that they'd flagged at 15,430. Almost touched it. Good rejection. second approach, and I'd say a likely third approach if you give them a little bit more time. But again, just a personal opinion, no guarantee that will happen. But if the liquidity stays there, does not disappear, and they've touched it once and they've approached it again, there's always a likelihood that they will get there. Just watching NQ. In fact, we might defer on the research and review just for a few minutes because we've got relatively interesting action leading into the major news release of the morning, being the GDP numbers. So we've got a tiny little iceberg which you can ignore because it's only been filled once. The only thing about it worth noting is that it exists and has now been broken through. But the more important thing to note is something that we've noted previously, where you have a thick liquidity area, it often acts as a bounce or resistance point upon the first test. It'll often get there again, may not tag it, but on the third or fourth approach, it normally hits it and interacts with it. This is the third approach. Again, not necessarily going to do it yet when we've got to watch in terms of are the buyers, are they filling what they need before they actually get there? Here, they've actually taken it through. We'll look at the size. It's a decent size bunch of trades. You can always zoom in and see what the actual individual trade was. It was about 82 into that liquidity. And what is happening just afterwards? You notice on the delta side here, that's quite a lot of potentially trapped buyers right at the top. So there's if you had a reason to scalp short, that might be one of the trigger factors in getting you down for a few points. But again, who knows? Sometimes, since we cannot predict the future, where you have a scalp, it can quite often be a big reversal point. But here, it does not look overly likely, except they've got some liquidity. They're trying to push up here, and if we zoom in a bit and we look at how many buyers they've got up here, they've got a fair few buyers. So yeah, it was a nice little scalping opportunity off that liquidity interaction there. Not a huge R result so far. In terms of what were the triggers to take that, in terms of our supply and demand setups, if you were taking a scalp short there, that is the C, in other words, the breakout failure or up thrust, and your triggers just off this chart. I mean, you've got taking out the higher, coming back down, you've got the big trade into liquidity, and you've got the market pulse. That's just some little factors in there, but the context is up, so it's not really surprising that they've gone up and interacted there again. And what is interesting is that this second up thrust, so if that's the first up thrust, which is the interaction with liquidity, the second up thrust, which was taking out that high and failing straight away, that would have been a beautiful trade. So once again, since you cannot predict the future, you do not know which of those two setups here, which are the two up thrusts, is going to be the one that gets you the 3R, the 4R, the 5R. On this occasion, it was the second one. And that's one thing that I keep saying: we cannot predict the future, and if we have a process which says we have this setup, we have these factors, we have this confluence, we take it, and we accept that a lot of the time we will get stopped out. That is the nature of the game. You are creating your own casino, and you're playing a casino. So it works both ways. You have to stick with the process to get the longer term results and accept the losses along the way. Okay, we are right into the 8:30 news, so let us zoom right into the ES. And since the NQ has actually given us setups along the way, I'll be interested to see what happens with ES on this one. So if we just zoom out again on the y-axis, you can see that heavy zone there and liquidity up above at 4538. Okay, we're coming right into We've got 15 seconds, 10 seconds. You can see that, as usual, a lot of the liquidity has been removed going into such a volatile news release, and price may disappear off our charts, but let's have a look. And the release is out. And it is 2.1% actual against a forecast of 2.4%. So from a factual basis, it looks like a miss, and the market likes that and has driven price up. And we were talking about this 415 a few minutes ago, so that will be interesting to see if we get there. They did remove some liquidity, but they've put it back on. That was something they flagged hours and hours ago. Now it's 5 hours ago. So it would not surprise me or most of the people watching this if we get quite close, if not interact with it. We had a nice little 77 stop along the way. Whenever you have a material value in the stops icebergs indicator, I pay attention. I mean, I've spoken previously about my settings and the fact that I show all the stops and all the icebergs, but I try and make them a little bit transparent so that they don't cloud my view. It's just factual information. It's market generated information because it is a fact that every single one of these red dots here was created by a stop order. So, sorry, every single trade there was created by a stop order. So it is market generated information that is factual in nature. We're still grinding towards that 4515. And it will be intriguing to see if we flush up into it and then reverse. That will be interesting. Maybe because the context is now bullish upwards, we will just keep going up. But anyway, we have 28 minutes, so I've got to be aware of that in terms of the time. It's just, we don't normally spend a lot of time doing live analysis. I know that is the name of this webinar, so sometimes it is good to actually do it. One of the things that I wanted to cover, which relates back to the London Open, we can do right now anyway. I was talking about in my agenda checklist for this webinar session, one of the things that I like doing is researching. So I can do that in Bookmap, and I often do it, where I've missed a session, because I have commitments. Like I did trade at the London Open today, but I only traded for about 20 minutes. I had parental commitments, and they always come first, so I had to go and tend to those. But one of the things that I do like doing, and I just want to get this out of the way. I do this especially on NQ in ETH because it interests me a lot to know what the significant trades are on the turn. So what I'm doing is just increasing the minimal displayed volume from 1, which is where I have it at all times that I'm trading, to a higher number to see how it filters out the trades and to see where the really large trades are and what happens on the back of them. It is more relevant to NQ, and maybe we should just move across to that. Still slowly grinding up. Has NQ had a reversal? NQ's had a reversal. It's probably the scenario. If I do exactly the same thing that I just did, but in NQ, so I increase the minimal volume and I go up towards 10, it normally becomes quite interesting in ETH because you can suddenly see all the big trades, so that when you zoom out, you can see all the big trades like this one here, 211. And you can see during Asia, it becomes even more interesting because you can often see that you need something like a trade of 25 or 30 in volume to be a swing point, i.e. something significant enough for them to have met what they wanted to achieve and to turn it around at least temporarily. That's one of the things that is worth doing in your own research to find out, do you want to see all the dots? Do you not want to see all the dots? How do you want to portray them? I know most of the people, probably still most of my audience here, have delta dots. I know I don't. This is primarily an ETH version of Bookmap that I have got on the screen. So I'm looking for things that help me trade the ETH session. And in that ETH session, as I've mentioned, you get more trades in NQ on average than you do in ES. And in NQ, it is better, in my personal opinion, to see the volume dots than the delta dots. The other thing that's worth doing, and we're going to have a look at NQ now and just do this, is to turn off those volume dots. Remember, we've got a chart here. We've got a 1 minute chart on the right of NQ. It's interesting. I mean, if you've got some doubt in your mind as, oh, will I use the stop icebergs indicator? How will I use it? If you just turn off the volume dots entirely, this is just temporary and it's just for research. This is not when you're trading, but when you're trying to ascertain how best to use some of the components in Bookmap for your trading, then it is really quite interesting just to see to see what has happened with the large stops and the icebergs here. So it's a little bit clouded because I've actually got the absorption on, so you can see the large trades, the 22 trade there. But that's 77 in context of everything else on this chart. That is a huge stop. So when we turn back the volume dots on, we now know that this we know that was a huge trade. We know that there's a probability that will come back and be retested, and that it should have some significant impact in being a line in the sand to potentially get us down further. Or if the sellers are swamped, then we may go up quite a long way. But this being a good line in the sand, so if I draw that, let me just draw this. As an interesting line in the sand. So when you have, you can see that they approached it a couple of times there. What would be a really, really good trigger is if they just stop out those people with an up thrust and then they take it down. That's always something that we talk about in this channel as the C method of the supply and demand. So from what I'm seeing, you've got a line in the sand here, which is at the 15,430 level. They're trying to drive it down, and you're looking for supply shorts in that kind of zone, preferably with some green delta there to say that they've trapped a few buyers, that they are going to act as fuel to get it down a bit. But bearing in mind that you're trading both instruments together, in other words, the ES relates specifically to NQ and vice versa. So you've got to watch what's happening in ES. You've got this trading view 1 minute chart there. But I also, as I say in my trading, I've got the Bookmap ES and NQ side by side on my giant monitor, so I can see the action, the relative action, and also importantly, if, for example, I've seen a huge trade in ES or a huge trade in NQ, or I've seen a massive iceberg in ES, that I don't miss it, because it could well have direct impact on a trade that I'm taking in the other instrument, or I may be in a trade in the other instrument, and it may give me added incentive to stay there, or a warning sign that that it is likely to go against me. That's just a couple of the ways that I use Bookmap. Okay, again, we've got a large trade here, 52. Anything like a 50 trade at this time of the day, because we still haven't hit the 9 a.m., is significant. But you'll also note here, and we've zoomed out, this is one of the great features of zooming in and out. You can see where the delta and the trap sellers are. So where you see that fuel there, and I won't grab the grab the drawing pad. I'm just saying this is something that I say all the time. That is fuel. They go down to grab the fuel to go higher. And that applies equally to whether you're talking about scalping or decent little swing trades. You'll notice that the scale recenters itself, so in terms of where our level was that we drew previously, is no longer right. So that's just something that you also have to bear in mind when you draw all over Bookmap like I've just done. So maybe I should get rid of it. Yeah, so if we zoom back over here in terms of, you have a good move down. Time to draw again. You have interesting large cells there. You've got a swing high there. This becomes the best setup, even though it didn't actually work out so far. And we're now breaking new highs in ES. But if you were shorting, that there would have been the best entry. On this occasion, as I say again, we cannot predict the future, and the fact that it went in the other direction is neither here nor there. What we're trying to do is demonstrate the good setups and exactly what the process is to take them. And that setup there is often very, very rewarding. Okay, come on. So we've actually taken out the, as I said here, when I spoke about this one, which was at the 430 level, I said that this trade here, the large 116, or these two trades, that often gets retested. So on this occasion, this is not a supply and demand trade in the ABC description that I gave previously. What this is more what I'd call a pullback in a big move, where they'll often come back and retest a large area, which you can call a resupply or redemand, or just a retest of a big trade and then continue onwards. And that's what that is. And we can go through that kind of setup in another session, but again, it's something that happens in NQ a lot in ETH. And it's interesting to try and describe it in real time as it happens during quite a volatile period of the market. So I was presuming that we might flush this low down here, but we haven't got there yet. What is ES doing? We still haven't got up to that 4515 level, but you can see that the liquidity at the 4515 is not stable at the moment. So that can mean lots of things. One of many, many hypotheses is that they need some more fuel down here to go back up there. That's one of the many. So we did flush on NQ. We flushed. So we retested and flushed this 57 trade here. That would in turn have been a good scalp long, which is the Wyckoff Spring. Again, that's the C category of the ABC setups that we looked at before. And in the context of this being a new daily uptrend or a continuation of a longer term daily uptrend, those trades tend to work better than the shorts. Okay, I'm just stopping to see if there are any more questions about anything. We are coming up to 8:45. I'm watching both. That's every trade. I'm just having a quick look at the liquidity picture again for ES. It's quite stable below. You can see this is a fairly thick liquidity band between 12 and 15 that's attracting it upwards, and you see that the liquidity up above at 38 is stable. So let's have a look at when that came back into the market. That came into the market at 21.37, so that's 9:30 yesterday evening New York time, so that's been there a little while. Okay, I am going to digress and do a proper review of NQ at the London Open, because there were plenty of trades that we could see where you used a combination of a very short time frame chart and Bookmap. So I think it's worth spending a few minutes there. ES is in a position where it's likely that you're going to tag this liquidity zone here. You're likely at some stage during maybe the RTH session to get down and tag this liquidity. And who knows whether they will actually get up to 4538 and tag the upper liquidity. But for now, you can kind of ignore that because it's too far away. Anyway, I just wanted to have a quick look at the liquidity picture, but let's go back in time to the London Open. And there's something in the slideshow I want to have a look at and how it relates to that C category trade that I was talking about. So let's drag us back to coming into 3 a.m. Eastern. Yeah, it's quite a drag back. It's also a little bit time consuming to get it back to where you really want to look at it. And whilst I've got that there, let's get a picture that I want to show you. So if we go back, right, okay, this is something I want to show you, which is if you use a short time frame chart in conjunction with Bookmap, and you use Bookmap as a clarifying tool of what you are also seeing on that short-term chart, and I'm just showing you my actual execution chart in Sierra. And this is what I was looking at when I was trading this. I was around basically about 3 through till 3:45. I took a couple of trades on the down leg, not the up leg of this session here. But what I want to point out on this, which is a 10-second chart on NQ, is the swing highs and how they came into play on each of the swing ups, so that if you were aware of where they were and where they may flush the stops, which is particularly relevant in a thin instrument such as NQ, you can see why knowing where those stops were was really quite useful as targets for any long setups you got after we had a reversal, which again was I think it's a spring, or it may just have been a type B, a double bottom trade on the way up. Anyway, so one of the things I wanted to do, which I was trying to do earlier, was to filter out some of the volume on this down to a volume of 10, so that we could see where those large trades were on the way down, and then see how they were useful as targets on the way up in conjunction with that 10-second chart that we just looked at in Sierra. So you've got this overall liquidity target down here at 15,394, and for NQ that is a huge number, 179 in the order book. So it's essentially a drive right down, and we can see whether it actually interacted with that liquidity or it just almost did. I think it almost did. It didn't quite touch it, but you can see how that liquidity was there well beforehand. And if we zoom right out, I think it was there the entire. It was there the entirety of the Asian session. So it was there for the whole of the Asian ETH session up till until it was interacted with a little bit in the first hour of the London Open. So what our general probability rule was that we said was that as we approach a thick band of liquidity in a thin instrument like NQ, the first interaction is likely to be a bounce or rejection, which you get. Then it's likely to reapproach, and it's often the third or fourth interaction that gets the true interaction or thrust right through it. So here you have the first interaction, it bounces. The second interaction, it bounces very, very strongly. And if we were looking at the 10-second chart that we just had a look at, we'd be noticing how how each of the little swing highs on the way down was interacted with in Bookmap on the way back up, and where the eventual um, let me see if I can just zoom this out. Where the eventual turnaround was. Again, the delta column and why it's useful to you. You want to see, if you've got an overall target or an overarching target down here at the 384.15, 384, you want to see, are there some buyers on this swing high here that can act as fuel to get you down there? Because if they are, then you have a great R setup. Say you're taking, 5, 6, 7, 8, 10 points as your R, and you do using a multiple of that to give you an equal value dollar risk per trade, as I've been saying that I do. Then if for example you decide it's quite volatile and you need an 8-point stop, which is a decent average risk point size in this session, then if you can get in this interaction here around the 409 and your stop is up around the 417, and it did go all the way there, even if you exited the trade there, which you didn't need to on this occasion. That is that's 09 down to 84, 16, 25. That's at least a 3R trade, and if you had scales, then you might have been lucky and got to a 4R trade. So having those little swing points and seeing the types of volume on each of those swing highs, and having these columns in Bookmap to give you an idea of where a good turnaround might be. So effectively, here we are here. What we're saying is that we have a good swing point here, which we saw in Sierra. This is the category C trade, which is the failed breakout above that one. So it is still a supply and demand trade. I mean, you can also look at it as a pullback on a slightly higher time frame, and that gets us straight down to that liquidity. And if we go all the way back down to 1 on the volume, since we've just had it at 10, I think you can still see those large volume dots again. Remember, you can always tune these with this slider here. So you can always just slide it back down until those large trades become obvious. I pushed it just about nearly all the way down, but now you've got these 3 large trades here which are obvious in this, obvious in the sense that they are material. Looking at every single dot on this screen, those 3 dots are the most significant volume trades. You've got about a 4th one, or maybe a 4th, 5th, and 6th one over here, but these 3 are the largest. With a thin instrument, wherever you have a large transaction trade, and we're talking about 185, and it's clustered 140 and 76, and you're looking along at the number of buyers and the potential buy trap there, and you can see it's quite large around about there. That is often a great trigger. Then you've got things like market pulse. I think we actually had you've got some stops here as well. You've got the stop iceberg, you've got the 60, and you've got a 7, and you've got the market pulse green zones, meaning that we're above 70%. Those, in my eyes, I may be biased because I took that trade. They're great triggers to have. And the other thing that you'd note from having a look at the 30 minutes in, or not 30 minutes, sort of, actually, it's a little bit later. I must have been here a little bit longer than I thought. I had some lifts to give. You can see how many individual opportunities there are in NQ. And if we had a look at ES, I'm going to have to really, really zoom out. Otherwise, we're going to spend too long trying to get back there. even though you've got the same kind of liquidity bounce point that you did in NQ, the trades the trades are a bit murkier or messier. They're not as clean as you would get by way of triggers in NQ. But in ES, the market pulse I do find is more helpful than in NQ. So I'm just saying the ES market pulse is really quite useful, probably because it is so messy, and it's probably one of the reasons why I created a timed version of that in Sierra as well. Okay, I'm going to stop and just see if there are any other questions. Yes. Sigma Bull, hello. How does Bookmap know stops are triggered? It's not given in level 2 data, right? Okay, this is the definition of MBO, okay, market by order. The CME, which is the exchange that NQ and ES are on, and as well as RTY, and they have market definitions given by the exchange, so that Rhythmic, one of the data providers out there, has very granular data, i.e. has data on every single type of thing that happened with every transaction during a day's session. So it can tell you the type of order that every transaction was conducted under. So the stops and iceberg indicator looks at that, what's known as market by order data within the data feed, and sees if they were stop orders or not, or whether they were an iceberg order. So here on ES at that time, we've got a stop order, which is the big round red circle on my book map of 38. That just meant that at that time, or if I actually zoom in, we might actually see the actual ones there. At this time here, there were 19 stop orders within this buy trade. Sorry, no, I'm showing the wrong thing. Thanks for the comment. Sorry. I didn't realize I was still on the images, so I apologize. Okay, yeah, on this individual trade here, you've got 19 MBO buy stops within this bubble here. So the bubble says there were 106 volume worth of trade at that time. In fact, I might be able to zoom in even more, and you can see that it was a volume of 62. Within that volume of 62, what this indicator is saying that there were 19 buy stop orders that were executed as part of that trade. So that's what that is doing. And here again, you've got an iceberg here. You've got a pink horizontal line. What this iceberg is saying that at this point here, a sell iceberg started, and it continued in time all the way till here where they quit, okay, for whatever reason that they might have quit. And within that time, they executed 50 sell limit orders. So there were 50 aggressive buy orders buying into this sell iceberg during that time. That number is quite low for this time of the day or any time of the day, but because it was a sell iceberg, I show it on my charts, and it's information that I take into account. You know, I have lots of types of information. Some I take into account more than others. And a small iceberg is probably one of the indications from the stop iceberg that I take with a pinch of salt. I think I've shown in the last few streams as well that if you've got a large sell iceberg above where the market is currently trading and it is still present, i.e. they are still trying to get more trades there, then I often see that as a good target, provided I get a setup for a long trade to trade towards that iceberg above. All right. I mean, I like it because I normally get in with a very tight stop and a very clear target that I'm happy to hold and not scale out until I'm at least within one tick of that iceberg. Okay, just going back to the ES, we're grinding up. And again, I apologize for leaving that 10-second chart on and not realizing I had. Yeah, we're still grinding up. They still want to get us towards that 4515, but it looks, since we're coming up to 9 o'clock now, that they're not going to get to do that until the RTH session. And bear in mind that they also have this the 4537 from much earlier. Whether or not that will get filled, who knows? I can't predict the future. Nobody can. It's just a piece of information that there is a large level of resting liquidity up there. Okay. Anyway, I hope that the information provided was of some use to people, and thank you very much for coming along, and I will stop streaming now. Thank you.